All right, test 1, 2. Good. One. Looks like everything's working. Good, good. For today, we are going to see if we can catch something. Either going to be before or after the news. Going on forexfactory.com, I'm seeing medium impact news at 8:30, high impact news at 9:45. So most likely entries will be happening after 9:45, 10:30. For today's analysis, we're sitting close to relative equal highs, or not relative equal highs, all-time highs, which is denoted right here. I guess for the two viewers, we'll start off with a high-level breakdown of a possible game plan for today. Starting off with the weekly, we can see that over the last 2, 4, 5 weeks, or 4 weeks, we are in a bullish phase of the market. What can we expect from this week? Either we continue the bull run or we start reversing. An unknown. We'll have to see what price gives us. From a daily perspective, price on Wednesday gave us a pretty bullish close. Bearish close on Thursday, closing half of that initial bull run. Friday was a bullish high test. And then right now for Monday, we are currently sitting at the upper part of Friday's wick. And if I'm looking at 4-hour and where price could possibly go to for easy targets, it would be essentially at 21,967. That's a 25% extension of the most recent run to the upside, either on the 4-hour or on the 1-hour. On the 4 hour, we can see that we've got this BISI, or this 4 hour bullish fair value gap. Price made new highs on Wednesday, came back lower to it, rejected it, came higher on Friday, came back down, rejected it once more, and right now price is sitting close to these all-time highs here. So from a 1 hour perspective, here's my, here's my bias here. Here's my swing projection of where I think price can get to based on this high and this low. We do have midpoint right here as well. So we are in the upper part of today's dealing range. So if we think about being either at a discount or a premium, we're definitely at a premium. And what am I waiting for right now? On the 15-minute chart, you can see that we're still pretty bullish. Price hit this high here, came back down, rejected this 15-minute fair value gap, closed above it. I do want to see price trading lower today. You can see here on the 1-minute chart, I have these relative equal lows with a little eyeball. I do want to see price take it out. It is a level of liquidity that's of my interest. But then at the same time, we have these all-time highs here above us. So you have to be very cognizant of what price is going to do today. And we drop down to the 5-minute, you can see here that we're also bullish. Order flow is bullish. We've got a 5-minute fair value gap here. And you can see price is respecting the midpoint of it very well. You can see the body's closed right above it. And it's sitting at the upper half of the fair value gap. And what this indicates is it's being respected. And for me to look at some kind of short for today, I don't want to see it break this fair value gap down. And then I'll be more interested in shorts. But as of right now, even though on the 1-minute, we've had a market structure shift with a bearish displacement, the upper or the higher time frames are still showing me that they're bullish, and this is most likely or could be a trap. I'm not going to hold this true, and we'll see if we can get a run. It'd be great if I can get a run before news and tag these equal relative lows here, but price might continue spooling to the all-time highs, maybe then create a reversal for us and then take price down to these relative equal lows here. We have more relative equal lows below us as well that I'm looking at. We've got some right here at 21,792. We got a triple bottom. Again, it's just lows that haven't been disrupted yet. So all of this here is of interest to me as well. And then ultimately we have our new week opening gap, which is a draw on liquidity. My overall bias is here. Doesn't mean that price has to get here. No, it's just a possible endpoint for if price were to turn around, what would it want to hunt? And it would be the new week opening gap. If price breaks this level and then starts aiming to get down to 21,792, it's probably going to want to get to down to the end dog. So if I'm taking shorts, I'll probably have my TP targets set at 780 here. I'm looking earlier in the day here. The week opened up with a bullish and WOG. New week opening gap came lower. Essentially was in it for 20 minutes and then it never touched it ever since. So possible draw for today. But for today's session, let's go over how I trade the pre-930. This is a model that I trade from ICT's 2024 mentorship. Highly recommend if you haven't watched it yet. I think there's a lot of valuable nuggets. But what we do at 7 a.m. is we start looking for relative equal highs or lows in the market. So you can see between 7 to 7:30, that's your first pre-market range for the pre-market. We're looking for relative equal highs if they formed. And here they have, you can see, here's a high that formed at 719, and here's a high that formed at 7:30. You can see price ran it really quickly. Post 7:30, dropped lower, took out these relative equal highs. And now it's kind of sitting below this orange inverted fair value gap on the 1 minute, but it's still on the upper half of the 5-minute fair value gap and of the 15-minute fair value gap here. So for me, if I were to be taking a short from here, I think that would be a gamble, as I would be betting on price breaking this level. If it does, you have a great entry, but I feel like right now, the probability of this happening is against you. So most likely than not, price might go the other way before it actually runs for the main move. What I want to see is a breakdown from this level, coming back up to it to some degree. Then we'll take it lower. Or what price do is it might break above all these levels, go to all-time highs, and then that's where we might see a reversal going down. Two possible options. That's my thesis for the day. I'm mostly bearish, but we'll have to see if price is going to hit these lows or these highs. Good morning, Douglas. How you guys doing? Good weekend? Douglas, you did miss the most important trade of Friday. Myself and some of the watchers, we caught a pretty solid move. I myself caught 5K, and this other guy, he also caught a pretty big chunk. No, I'm doing well as well. Monday morning. Mondays are a bit tricky to trade right after the weekend. We got to be extra careful. But we'll see if we can, if something presents itself today. Oh, you did? Awesome. Yeah. That was on Friday. That was a large Judah swing. It was like a 1.5 hour Judah swing before we caught that main move. It's what I wanted to see, and it was great to see it later on the day. I was just surprised how long it took until it actually reversed. So it definitely created some pain for us in the market before dropping to our targeted location. But I haven't had a chance to invite you yet, Douglas. I'm probably just going to add you as a friend and start a quick chat there. But I think later on, I just don't have the time right now, but I'll try to create some community or group for us to share analytics. All right. You can see here, if people decided to take the short after this 1 minute market structure shift to the upside, you would have been already out by now. Most likely you would have taken something like this. Your stops are probably always, or should be, at the high of the 1 minute candle that created the fair value gap. This is what you wanted. You would have been out already, just because the 15-minute chart is still so this is the 5-minute chart here. But looking at the 15-minute chart, very bullish. Nothing here indicates that we're going to catch a longer move to the downside. So to the downside, I really wish, but what I look at is high probability relative equal lows. I really wish this candle here stayed above this one to the left. That would indicate high probability. But the moment it starts wicking like that, it just means that it took liquidity from a 746 candle, and it just makes it a lower probability equal low target later on. Times right now 8:15. Usually things are going to be a bit slow in the mornings. I don't know if I should start today's stream at 9:30 or 8 o'clock, but I usually sit down at the computers at 7 in the morning and I start looking for trades. But I'll see how the 8 o'clock streams go. If not, I'll move them to 9:30 if that's where the majority of the action is. But probably once a week, I catch something in the morning before the 9:30 open. For example, days of CPI and SPI. It's best to trade those in the morning. And if Monday mornings of NFP week, those are great to trade with. Usually I always take a trade there. Price is usually the cleanest. That's where we see traders go in, take their profits before the 9:30 chop comes in. But for today, the news calendar looks pretty clean. It's just a Monday. Something a bit weary about. And yeah. What I might do, change my view for you guys, because I do have a 5-minute chart of what I'm viewing, but I'm not showing it on my screen because there might not be enough real estate. But I'll leave like this for now. If anything, I'll be swapping out the 15 and the 5-minute chart concurrently. But on your charts, I think the 3 main charts that you want to be looking at all times is the 15-minute chart, the 5-minute chart, and the 1-minute chart. Those are your best 3 charts to view and look at. Right now, from what I'm seeing, price is looking bullish. Probably faked out some SMT traders here. Came to the upside. Price came, rejected the first fair value gap on the 1-minute, and is pushing to the upside. Is this something that I'm going to try to want to catch? As of right now, no, it's not. How many points does it have to reach the target? 18 points. Okay. Here, it could possibly hit that before 9:30. If I were to take this long, where would have been the opportunity? I probably wouldn't have taken it here because price could have came back to the second fair value gap, traded from there, and then went higher. If you are trading it, I know you wanted to catch it, probably would look something like this. The only real risk here is if price is bearish enough, it might tap into that third fair value gap there and go higher. So I wouldn't be confident in a stop loss there. And the moment that you start placing your stop loss somewhere here, trade becomes essentially a 1.5 to 1. And those kind of trades, I don't trade. The R is not there. It's not worth it. See what's happening on the 15-second chart here. Price is punching to the upside. Okay. If I see a great entry somewhere here on the 15-second or on the 1-minute, I will take it long. Because that's where I think the market's going to go in the pre-session from what I've seen right now. Look at this right here as well for later on. Relative equal lows. We got a low here at 53 and at 808. So you can see on the downside, we've got all these stepping stones here that we want to take. So if we are taking longs, I think it's going to be against my initial bias for the day of trying to go short. But right now for the 16th of December, we're in a phase where we're close to all-time highs. So it's a bit tricky to trade in. Right, price is pushing to the upside now. Guys did manage to catch this. Terminus would be at all-time highs. Or if you want to stretch it, I can go to 0.25 Fibonacci extension. There goes price. You can see on the 15-minute chart, okay, this is not a fair value gap still, but we drop down to 5-minute. You can see fair value gaps starting to print to the upside that are BISIs, which is indication that price action is bullish. On the 1-minute chart, we failed to create any fair value gaps after 813. If we have one more form, trades and rejects it. I might take it long there. Just need to find an entry right now. I spoke about this with my first stream, but one of the algorithms that I trade is the 830. That's when the market has a tendency to spool in a direction. But it looks like we're spooling before 830 at 815. So there is that. See, at this point, price has moved so high up already. What would be a reasonable entry? Something like that. 5-1 on the 15-second. Super aggressive though. We just have to wait for a high probability setup here for us. Price didn't respect this fair value gap here. I just blew right through it. So indication that we are pulling back right now. Or we could go to, like, where would we pull back to? That's the question. And again, there's really no fair value gaps. There's a bullish quarter block here. But again, it's a fairly weak one. We have to wait for the market to give us a bit more here. Most likely going to have a 5-minute fair value gap form here in 1 minute. Once this candle closes in 50 seconds, that's when we'll have the confirmation. But that is where the 5-minute fair value gap sits on the 1 minute time frame. A3 algo is going to commence in 6 minutes. Got some relative equal highs here for him on the 1 minute. If price creates this and drops lower, this is going to be a great target to hit to the upside. So, i.e., if it leaves this here, drops lower, or it keeps punching up, that's also an option. $5 points still hits target. Did anyone here in the chat catch this at any point from 814? There's really one good entry at 815 here. This is definitely good, seeing this pre-market, seeing this bullish push higher. If market opens up bullish, what's your bias at the open? It's going to be bearish, always. If you look at yesterday or Friday's closing price, if I switch to relative trading hours here, Friday's closing price was at 21,769.50. Just this red line right here. Right now we are 130 points above it. So most likely, remember stats, 70% chance that price is going to hit that midpoint within the first 30 minutes. So you trade that one model, the odds are for you. I think it's the easiest model to trade. Please repeat this model. Yeah, definitely. So data indicates that within the first 30 minutes of the 9:30 bell, price is going to hit the midpoint between yesterday's close and today's open. So yesterday's close, which is going to be at 21,769, there is a 70% chance that the midpoints could be hit within the first 30 minutes. So what's the midpoint here? It's going to be like, assuming that right now was 9:30 and we're opening at 21,908, there's a 70% chance within the first 30 minutes, price is going to hit this level right here at 835. Okay. So that's the data that you could trade with that helps increase strike rate. So when we open in a bullish state, pre-market and during London, it's a higher probability going short than long, assuming that the setup's there, right? But that's kind of the underlying bias that you have for the trading. So for today's 9:30, I'm going to be bearish. And I'm going to be looking for a trade to midpoint, if not to yesterday's close, or at least this NWOG. When incoming. Yeah. Hey, Fed, how's it going? Hey, Fed, you managed to catch anything today? At least this run? Here was the entry. This was the trade. I don't know why I didn't take it. It looks so clean in hindsight, but I don't know. Something in me just, I was waiting for a deeper retracement. Got one loss in London, Fit. Not bad. You know what? That's one loss only. That's not bad. It's time to make it up. All right. All-time highs have been tapped. And now we are trending into no man's land. How high is price going to go? The 1 hour projection is 0.25 extension. But as of right now, if you guys are wanting to take longs, I wouldn't recommend it. In my opinion, it's gambling. Now we have to, this is what most likely is going to happen. Either we get some insane reversal right now, pre 930, and we take it down, or we have to wait till 945. So we wait for the 930 news or the 930 to open. The high impact red news at 945. And then probably 5 minutes after that, start looking for shorts to catch a 950 algo. That's going to be the most likely the highest probability trade, like at 950 today. So right now, what might happen is a turtle soup. But as I said before, guys, look at all these relative equal lows that I'm looking at. So right now, the bias that's unfolding as we went higher, we want to create some kind of market structure shift, some reversal, some indication that price wants to go to the downside. What we're looking for is like a shark attack. And then once we see that, like that Judah swing, that fake out, displays it to the downside, that's when we're going to take lows. And by lows, I mean shorts. My coffee has not kicked in yet. So I will move this a bit to the right. So this is taking liquidity. Today is December the 16th. I know all of you are most likely trading prop firms. My plan is to stop trading end of week this week on the 20th. If not, maybe on Monday on the 23rd. And then most likely I'm taking off the 24th to the 27th. I will view to see what's happening on the week of the 30th of December. It might be a really low volatility. And then I might start picking up trading on the 6th if I don't go to the Dominican, or on the 13th. So we'll see. I'm trying to convince my friends and family to go to DR to soak up some sun. But no one wants to because of the drones right now in the States. Anyone here lives in the States and is dealing with these unknown drones flying the skies? I don't know if you guys heard the news. But it's fucking crazy what's happening right now in the States. Drones have been spotted in London, in Germany. Yeah, it's insane. I don't know what Biden wants. Biden should be shooting these things down, but they're just letting these drones fly everywhere. I don't know if they're aliens, if they're government controlled. No one knows what they are. But the penthouse is meeting up on this issue. So, but anyways, we're here trading NQ during the end of the world. I'm just joking. I'm sure it's nothing. All right. We've taken out all-time highs. We're breaking through this 1 minute fair value gap here. Where would the market structure shift be? It would be right here. This is going to be the very first MMS that you'd see. It does happen. So far, the 5 minute still looking bullish. 15 minutes still looking bullish. What we want to do when we're trading is you can try to catch the top, but it's extremely hard, and I wouldn't recommend it. We want to see some confirmation that we're going to the downside, the top is shifting, and then we catch a second move going down. R might not be as good, but strike rate goes up, and overall you'll do better. See, look at that. I was breaking below it. Price came back up. Is sitting, or this is what ICT calls. What did he call this? A mohawk. The price just kind of goes 1 point below the mean threshold, and he considers this as still a bullish close. You'd want to see it to close this place a lot further down into the fair value gap, if not completely close below it, create a mini fair value gap here on the 15-second chart, trade up and then down. But as of right now, I don't see anything tradable right now here. What are your biases today for the day? Is it like mine that you're looking for shorts after the 9:30, or you guys want to take this long and ride this wave if possible? What are your thoughts? Definitely short. Yeah. To the end, dog. Yeah. The new day opening gap, man. Oh, wait, where is the the new week open? Yeah. Are you talking about the new week opening gap at 216? So like 21,780. You know, like try shorting. Yeah. This is what ICT said about days like this is the market rallies higher pre-market. It's telling all the retail traders that, oh, it's going to be a bullish day. Everyone goes bullish and then bam, it just reverses and it takes everything out. So it's in line with that data rule that 70% of the RTH gap gets hit within the first 30 minutes. It's in line with the theory that retail traders see a pre-market open at a bullish level, then everyone wants to take it up when really it's just going to start shorting. So this is all good price action. It's all supporting the fact that we will go shorter later on today. Yeah. Asian session lows already displacing quite high, so it might keep pumping. Yep. Yeah, it might keep pumping. I hope it doesn't. That's what I thought on Friday, that it's going to keep pumping, but it finally gave us a reversal. We stole some money from the markets. I don't know if you guys viewed ICT's trade that he took on Friday, but it was really similar to mine. It was good to see. Eventually, guys, after a couple of 100 hours in the market, you'll take a trade and then you'll see the exact same one being posted by ICT. And that's when you get that feel good feeling that, oh shit, maybe I'm starting to see the markets like ICT is. But when it comes to price, it's all about patience at the end of the day. Can't chase it. Don't chase that payout. Just be patient, because usually what happens is we take a trade. We know it's a shitty trade, but we want that profit to be earlier in the day. Our stop loss gets hit. We take another shitty trade. And then when we're fully burnt out, we see the perfect trade unfold in our eyes. But we have so much fear built up from the first two trades that you don't take it. And then you're beating yourself up. And then after that, you take a revenge trade, which is another shit setup, to make up for that one perfect mistrade. You start spiraling in this vicious circle. So I think patience, something that I've seen amongst like my friend group, is patience is usually what's missing. Fear of missing out. That's usually what spirals traders into not the best mental state, and you just become a loser at that point. And you become a retail trader because you start seeing the market that way. Today, hopefully we'll get some precision and we will drain the market to the downside. I think I'm going to up my risk today from $200 a trade to maybe $250 and see if I can catch something. All right. So as of right now, if you've just joined the live chat or the stream, we're probably not trading for the next hour and 10 minutes. I want you guys to look at this fair value gap here. And when you see something like this, where a fair value gap just kind of price is bouncing within it, for me, this is a low probability fair value gap. Usually what you want to see is, price bounce from it, go higher, and then either bounce from it or shoot right below it, with respect to the upside, and then drop. Something like this, it's indicating that price doesn't really know what it's doing. Are you aiming for a specific RR? For me, I'd probably say 2-to-1 minimum there, but my average is usually like 5-to-1. Why are you waiting 1 hour and 10 minutes? Good question. So if we kind of look at where we are right now in the trading day, is price opened up, it's spooled, it's taken out one of the targets that we were possibly looking at today, which is all-time highs, which was Friday's high at 9 o'clock. It's taken it. And right now, price is essentially moving sideways, and it doesn't really know what it wants to do. The chances of having an aggressive rundown over the next 40 minutes before the open, not even 30 minutes before the open, because we want to be at least 10 minutes out before the open, it's highly unlikely. Where price is going to create the Judah right now and then start the main move to the downside. I think what's going to happen is 9:30 has to hit. It's going to do some damage on this area. We have news at 9:45, Alec games. And if there's news at 9:45 and we have it open at 9:30, most likely you will not be taking a trade between those two events. So we have to wait at least 5 minutes before 9:45. So 9:50 is when I'm going to have the green light to take a trade. And most likely by then, we've done some damage, some Judahs, and then we're going to be looking for clean trades to the downside. So the levels that we're looking at is going to be level 1, these relative equal lows here. 865. We've got some here at 838. And then we got some here as well. 792. And then ultimately, I think a really good target or a terminus for today's trade is going to be the NWOG, which is at 780. So there's a lot of stepping stones that can be taken to the downside to hit this target. And our goal is to see damage, displacement, and then we're going to start attacking these lows here with shorts. So that's my bias. What price can also do is after the open, it might just keep going up for the rest of the day. And that's something that I won't trade. I'm not interested in. I like every single time we open bullish from yesterday's close, which we are right now. Yesterday's close is this red line right here, Alec. 770 or 769.50. I am at least aiming for the 50% mark here. So the highest probable short is most likely going to be these lows right here, assuming that price will be around here at 9:30, and this is where we open. My first partial most likely is going to be here, and then I'll see if I can hold it to the end dog. Does that make sense, Alec? Or Axel, sorry. Wow, my dyslexia hit and hard there. That's kind of why we're waiting. Like everything from now till 9:30 is low probability. Yeah. For us to take a short, what we want to see also either on the 15-minute or at least on the 5-minute is some kind of market structure shift, displacement, fair value gap being broken to the downside. Like look at this one fair value gap here on the 5-minute. It hasn't been broken yet, right? So if people are taking shorts here and the 5-minute order flows bullish, you're placing bets against this massive bullish run being broken on this one 5-minute fair value gap, which is highly unlikely. So we just got to wait for the market to show us what we want to see. then we attack. And remember, our risk is, hey, we're wrong. Price is not going to go down. It's going to go up instead. And that's what the risk is when it comes to trading. So the good thing is we got a lot of downside to attack today, which is good. When we see, so if you guys aren't familiar with RTH gaps, so regular trading hour gaps, highly recommend you study them and you watch them before every single 9:30. If the RTH gap is below 40 points, this is the rule, and this is the rule that I stick beside. Do not trade 9:30 to 10. Okay. The reason why is because the opening is going to be messy. It's going to go sideways. Most likely, it's not going to be a lot of action because the RTH gap is low, and that doesn't really spark interest in the market. But the moment that we're above 40, I like it when it's around 80, 90, but here we're at 130. That's when we'll see excitement at 9:30, and you'll see high probability setups and runs happen more often than not than small or smaller RTH gaps in future days. So if RTH gap is above 40, trade between 9:30 to 10. If not, wait for 10 o'clock and then find a pattern then. Body is respecting 50% of that 1 minute FEG. IFEG. Oh, this one right here. Yeah. Remember how I said like 20 minutes ago that what I'm seeing here looks like a low probability fair value gap? It is. Like, price has no idea how to it bounced, broke it, bounced to the upside, came back to it, came higher. Can price just shoot right through it? Maybe, but this indicates for me that this is a weaker fair value gap, and I don't really put a lot of like strength around it. Like this is crap. So where's price going to right now? Probably these two relative equal highs here. Like, why wouldn't it? Look, it created some damage to the downside, and it's most likely attacking these two here. Is it something I'm going to trade? Definitely not, because the RR is not going to be there. Even though I think there's a 70% chance right now this is going to get broken in the next 10 minutes. I just wouldn't have a model to execute on. Unless price comes back lower, taps this fair value gap there, creates a strong displacement, and I get it on the 15-second for a quick 1 minute scalp. Maybe I'd consider that, something like that. Right. And that's a 2-to-1 there. But then it's still really messy price action here, but most likely price will hit this point in the next little while. If it doesn't, if it drops lower, then it's just going to be a target for the 9:30 open. If price decides to leave this triple top here and go lower in reverse, I might scalp a quick long. We'll see. But this level, it's going to be taken. High probability. This is what ICT calls priming, is when it starts creating these highs here. It's just telling retail traders that, oh, we can't break this level. We're going to keep going lower. And then what price is going to do eventually is come back and take out all the stops here and take some liquidity out of the market. So, all right, price is hitting. Okay, this is a blush. Let's see how it respects this here. a quick long right now. I wouldn't say this is high probability, guys. This is higher probability, but I think price did an excellent job here, and it's going to start targeting. So this is where my stop is, and this is where my entry is. Stop right below there. And I'm targeting for a 1.6 to 1. It's gonna be $60 to the upside. Oh, it's tiny. This is not worth my capital, but just scaled in here based on that reaction. And my stop right now is sitting right there on the 15-second chart. The 15-second chart broke the real fair value gap here. Right now, the bodies are still sitting in the upper half of this fair value gap here. That's good to see. Might be wrong about this one. If this body pops up, the upper half of the fair value gap might indicate that we might push higher here. You can see how it's jumping away from it here every time it tries to close below it. It looks like we're going to be out in just a sec here. Still in the trade, even though it looks like I'm tagged out. Stop was right there. And we're out. Oh, and I'm out there. Unfortunate. First loss of the day. What's price might do? These triple tops here, I think it will take them. Or dropping lower. It's not something that you'd want to short against. Interesting. A laugh price just took me out by the pip. I went to target. We are 34 minutes before the open. For the open, what I want... You're kidding me. I can't believe price took me out like this. One of the most frustrating things, at least for me, is when I take trades and price does something like this to me, where it barely takes me out and then goes to my position or to my target. That is frustrating. You're still in this trade? Good. I still think it's going to hit these highs here. I'm not going to chase it at this point. I'm just going to let it go without me. Yeah. All right. So bias was right. I was just off by one tick in my stop loss placement. This blows, but it is what it is. You're still in it too? Oh my gosh. I should have freaking increased my stop loss just by a bit more. Usually my stop losses sit below like here, like below the candle that creates a fair value gap. No, yeah, it would be right here. Man. Congrats, guys, for not getting tapped out here. What bullshit price action? Like usually price shouldn't go this low. It should have stopped at 901.25. But it definitely mohawked a bit more than what I anticipated it to do. Yeah, still read it correctly. But it's tiny. It's $100 lost per account, so $500, which is pennies. Pennies, guys. $500 pennies. Yeah, exactly. This day for 500, you can go to Costco, and that's it. It's one trip to Costco. Pick up some food and staples, and you're at 500. More liquid. So it took out these highs here. Did it take out these highs? No, it didn't. Let's see. This closed at 913. 913. Yeah. So even though price is rejecting here, it's still probably going to attack this quad top here. So the draw on liquidity for the interim is here. Price right now is digging into a fair value gap that it formed. It broke it. Oh, well, it didn't break the downside yet, but it is trading below it. Here is the second fair value gap. Once it breaks this one, the lower one, it's going to take out these lows as the next stop on liquidity or inefficiency. So having your stop loss right here is going to be the safest part. Like the moment it breaks this, trade idea is incorrect. And then if I was in a trade right now, I'd have my stop right here. Once it breaks this low here, your thesis is over. If you are like a 15-second trader. But right now it's looking really good on the on the 5-second or on the 15-second. So just analyzing where PA went is I was looking at the 1 minute here, but if I dug into the 15-second and I looked at where my stop should have been, there was a massive gap here. And what price did is it traded to it. I didn't see this at the time. And technically, a stop loss below this level would have been safe. But instead, I looked at the gap here on the 1 minute. So this is how the 15-second can help you to place more accurate stop losses. But here is the logic that I was missing when I was entering. Price is digging into the second fair value gap again. See, it's getting messy right now. It's 27 minutes to the open. And if you kind of zoom out here, look where price did here. Just moving sideways. We did create logic of why it would go to the upside, but spanning out, it's still going sideways here. Hopefully stops can be pushed to break even here if you can get below this level, as I think probability right now is decreasing the way it's trading. It should have taken out liquidity right here. It didn't. It is going to take it out though. If not now, then at 9:30. And then once it does, we're waiting for the Judah. We'll make our money back. How are you guys trading this right now? Stops at break even, stops below this low right here. How are you guys trading this consolidation that's happening on the 1 minute? Or are you guys out? Okay. 5 minute looks very messy right now. 15 minute, stop at a B, good. The moment that you guys are in a trade for a long period of time and it starts doing this, Just put your stops at break even. It's not even worth risking at that point. I would have been out right here at break even as well if I was still in it. $6. Let's go, Alec. It's like Alec is funding for meals today. Order the McD's. 6 chicken McNuggets. Yeah. So here's an example of trying to trade close to the top in longs. Overall, I think trade idea was good. It's just that we are at all-time highs. Try to scalp the last little bit. I traded very little. I traded half a position ultimately. It was actually a quarter, and I scaled in another quarter once I saw PA rejecting. But all in all, the better moves will happen today at 950 if price drops. And that's when we're going to see pips displays versus like what was this year? 9 pips essentially on the 1 minute, or points. I used to be an FX trader before I moved into futures. That's why I refer to as points as pips, but you guys understand the idea. So let's get rid of some of these fair value gaps here. I'm only going to focus on meaningful ones here, like on the 5 minute. Like the break of this one, this is something meaningful, but look what we have here on the 5 minute. It's pain waiting to happen. For a high probability setup to happen, I'd have to break this and then go lower. But most likely that's what it's doing right now. Look, we created a top right before the 930 open. Everyone's saying, oh, okay. It's gonna drop from here. It can't break 21,914. But that's where the blood is. Can you guys stream at 1080p for my live stream? I want to see what the quality is like on the other side. Yeah, perfect. All right. And now I guess we're just tape reading until 950 to see what price is going to do. And the more you guys tape read every single day, after a couple of months, price just clicks eventually. Like this was unfortunate here, but it looks like it was just setting up a target for the open. My model is presenting here for short, even though it's pre-930, going to take it with small risks, expecting those equal highs to still be taken. So where would your stop be then? If you're expecting these highs to be taken? If that model works for you, that's great. I've personally never traded through the 930 open. if you're right and price never comes back to your stop loss, huge trades. But I still haven't, still not comfortable with that. Slightly above the highs, we'll risk about $100 for this. Okay. So for those who are in this chat, it's a close buddy of mine. He trades similar to what I do. He also is YouTubing his journey to make 150K in the next 12 months. Super exciting. Can't wait for you to hit that. So if you guys want another set of eyes on the market, fit to trade, he knows what he's doing. All right. Are you in that entry right now, Fit? I'm trying to map out your trade right now. Of the highs. In short, okay. Right now, we are 120 points above of yesterday's or Friday's close. Still a really nice level. Got in at 896. 896. Oh, nice. Okay, so right here. Let's grab some coffee right now. It's running low. Fed, I'll tell you right now, like this level is really scaring me. I feel like it's like a dead giveaway here. Where's your stop loss? How high above it? So on the 15-minute chart, what did price do? It's trading to, or it's trading into this 15-minute fair value gap here. Stop's going to be break even around 925. Oh, listen, if you can get a break even by then, that'd be great. And then you're just basically betting on the open. Risking $78. Okay, good. Pennies, more pennies. Okay. So how did the 15-minute close? It closed in the upper half of the 15-minute fair value gap. This is indicating for me that it's a strong fair value gap. There is a higher possibility of it going up than down. But you can see here, it's, it's rejecting that midpoint really nicely of it. It dipped into this 5-minute fair value gap. So we'll see how price reacts to all this. Again, we're tape reading till 950, and then at 950, we're turning on our snipers, and we'll see if something presents itself. Another thing to note, guys, you guys aren't profitable, or you guys are struggling to take profit, look at your like risk reward ratios. The chance of me being right on a trade right now is around 45%. So I'm less than 50% right on where price is going to go on my trades. But my average risk to reward is 4-1. So my profitability comes from catching large moves versus small moves and being right over half the time. So just something to keep in mind there. You don't need a high strike rate to be profitable. Even at like 33%, like you're right 1 every 3 times. If your RR is 4-1, you're still making money. As long as you're trading small enough and you don't blow your account, you will see that equity curve rise. And it's very easy to catch long positions within NQ because remember, price is time-based. Everything happens around time. And once we get that Judah and that initial displacement, the probabilities of it shooting 5x where it's at right now is very high. The days that are going to get you is consolidation days, price action like this, right? NFP, CPI, those are the days that are going to get you. But if you try to position trades on days where there is news around either 9:30 to 10 or even 8:30, those are most likely going to give you the cleaner days. Or don't trade after large range days. So let's look at some examples here on the daily chart. Look what happened after Wednesday. Okay. So on Wednesday, we had a really large range day. And usually the next day is hard to trade. So let's look at Thursday's 1 hour price action. So here's Wednesday's price action here on the top left. And then look at Thursday. Let's go to look at it. Like you are essentially trying to catch a trade here. And if I dig into the lower time frames, like it's messy. Like there is no single direction. It's moving essentially sideways until Thursday. But if you guys want to create some rules for yourselves, I'll say number 1, do not trade after large range days. Just take the day off. By not trading, you will make more money on the long run. I didn't trade on that day. I know some people that did, and it was harder to pull profits if they did, or most likely they lost money, but not every day is a trading day. And I'm probably not going to stream. I'm just probably going to do tape reading on those days. All right. Look what price is doing here. On the 5-minute fair value app, it's rejecting it. Bodies are still sitting above the midpoint of the 15. Guilty, lost money last Thursday. Yeah. Like fit, I'm being serious. I'm not going to freaking trade after large range days. At least not now. Maybe in the future, maybe in 1 or 2 years, but it's all like it's either I've broken even, made very little money, or lost on those kind of days. And eventually, like, you just have to look at the stats and say, it just doesn't make sense anymore. ICT was right. Do not trade after large range days. He never streamed after a large range day. He always said he has some family matter or he's not going to stream. And it makes sense because after he's like, why do you guys think I didn't stream on that day? Because yesterday was a large range day and today's price action is going to be shit. If you guys need help with understanding what's a large range day and what's not, I might pin in the community tab. Like today was a large range day. Like if we look at data, and it's all relative. So hold on, let's look at some examples. So large range day. Okay. Wednesday. Right here, Friday, November 15th, large range day. That Monday, look how small the bodies are. Like, look at all this. Right? Large range day on Wednesday, but again, I'm pretty sure Thursday was a clean day to trade. So large range day, 31st of October, consolidation before there's another push up. Large range day, 15th of October, consolidation. See? Large range day, consolidation. It's not always consolidation, but you can see how many examples I found here that the next day is consolidation. All right, large range day, small range day. Large, small, large, small. All right, we got the open in 9 minutes. All right. Finally. The time is near. What do we have here? Relative equal highs here. See, high 1, high 2. Will price break that? Probably. Below us. Targets the downside. Relative equal highs. Price on the 15-minute. Still bullish. On the 5-minute. Out of the short, now falling to move lower. Failing to move lower. Couldn't wait for that open. Good. I agreed with that. Agreed. Look how these wicks are closing here. This price did not, the bodies on the 5-minute never wanted to stay below that 15-minute fair value gap. Didn't even get into the 5-minute fair value gap. All these bodies are sitting here on the upper half. So, do you guys think that these highs are going to get taken based on what you see here on the 5-minute? Or do you guys think it's going to drop at 9:30? We can place bets. Friendly bets. What's going to happen? Yeah. See, it's a giveaway, right? It's a dead giveaway. 100%. I would say like 95. I've seen price action where it actually stays and it just goes the other direction. But most likely, yeah, the highs are going to be taken. So, and I personally like that we have news at 9:45. Having news at 9:45 per ton, it's perfect. This is what we want to see. When we don't see news during the day, don't trade it. It's not even worth trading. That's what makes the market run. News. So 2 rules, I guess. Don't trade after large range days, or if you do, trade one micro, very little. If you guys need the urge to trade, or trade a demo account. And 2, if there's no news on a day, don't trade it. The only exception to that would be the Monday of NFP week. If there's no news on that Monday, trade it before the 9:30. It's going to be very clean. So between 9 to there's the 9:25 little jolt of price action. What did it do? I just took out these relative equal lows here on the 15-second, on the 1 minute, right? Whenever we have smooth lows or highs, yeah, definitely fit. It's going to bombard everyone. So usually when we have, that's funny because I started rewatching the 2024 mentorship again. And I highly recommend all of you to watch ICT's content over and over again. And he said something really interesting when I was watching it late last night. He said, relative equal highs and lows are like against human psychology, like smooth waters invites rocks. And what he meant by that is like when you go to a beach and there's extremely clear water on a pond, not even a ripple, what's your first thought? Like you want to take a rock and you want to disrupt it. And this is essentially what the market shows. Like these smooth highs, they want to be disrupted by rocks. So, keep that quote in mind when you're trading. If there's a smooth high, don't trade away from it. If you don't see a short, or if you don't see a long to it, just wait until it gets disrupted and then see what the market wants to do. Okay, we are 3 minutes till open. 3 minutes till open. Okay, let's focus on some key metrics here now. So you can see my 5 minute chart here. It's already painting the possible RTH gap. So Friday's close at 414 and today's possible open. It'll shift a bit, right? But it's 120 points to the upside. Midpoint is our target here. This right here is screaming out like this level here, right? This is the obvious low that I'll be taking. If I do manage to catch something up here, it's going to be a 50, if not 70% partial. And then the rest is going to be down here. Can price hit today's the end dog? I think it's a good level to hit. It's a draw on liquidity, so. Bum, bum, bum. You can see here. Okay, perfect. Let's see what's happening on the 15-minute chart. Curious how that's going to close within it. Price is going to, if that body is going to close on the upper half of that fair value gap, either on the 5 minute or 15, it's just going to indicate, if it closes below it, we'll see what happens. Right now, 2 minutes before the open, price is shooting to the downside. Wonder why. It's like the 930 Judah, or the pre-open Judah, for the main Judah, which we're waiting for to the upside to take this to the downside. Forty seconds till open. What am I looking at? I'm looking at a Judah to the upside, Harmon to 913 post open, and then my bias is looking for shorts today. That's gonna be my primary trade. These quad tops here, this is most likely gonna get hit. 3, 2, 1. Uh-oh. Price is moving to the upside. It's taking out the first level here, these relative equal highs here. And what an easy guess, guys. Wonder where price is going to. There's this juice right here that it wants. And there you go. Target's taken, guys. Just like that. It wasn't our target. It was the target for price to take. There you go. So now we can get rid of these things here. Make this like a lighter gray. And what are we waiting for now? We're waiting for 9:45 news. We have news in 14 minutes. Taking a trade before this or into that news, I think is crazy. But once that news hits, I'm going to be looking for some kind of displacement to the low side, some Judah swing. Like the way I'm seeing this right now is this right here. I can't even label it. Okay. Right. This is I'm anticipating this is the Judah, right? This is Judah swing. So Judah swing, right? And then our main targets for the day are going to be midpoint of RTH gap. So the main target. And then we've got on the 5-minute chart, if you look really closely here, like what levels are standing out to you? This one right here, right? This is target number. This here is a target. I think this is the easiest target to hit if we're grabbing a short. Right? And then we got another target here from the London lows right here. This is secondary target. And then the final target is going to be right here. So that's how I see. And where's the Judah like going to end? Like we'll have to wait for some confirmation on a higher time frame that price is switching, it's shifting to the downside. And then once you see the displacement, that's when we go in short. One thing I want to talk to you guys about is the first fair value gap. This is something that's going to give us additional bias on when it's shifting to the downside. So it's a first fair value gap that forms on the 1-minute or 15-second chart after 931. So I'm looking for 931, which is right here. And the first fair value gap, bam, right here. This is a very strong fair value gap. We're going to call this 15-second first fair value gap. I'm going to transpose this to the 1-minute. Okay. And I'm going to try to find a first fair value gap also on the 1-minute when it forms, but after 9:45, we're going to want to see how price respects these levels. This is going to be the strongest fair value gap in the morning session. We got 10 minutes of news. I feel like the 950 algo is going to be spicy today, but we'll see. All the right things are happening right now. Yeah, some equal highs. We got a Judah into the 930, a bullish open, a huge RTH gap. Like, could you trade before the 945? You could, but there's a lot of risk at 945. Right now, on the 1-minute, price is painting very efficiently. No fair value gaps have formed. It's essentially moving sideways, right? This is called high resistant conditions. Conditions that you don't want to trade through. Looking for like a 15-second fair value gap when the 1 minute looks like this. It's not something that I recommend. We got to wait for cleaner price action. Hey, Sil. I probably mispronounced your name. I'm sorry. Let me Google how to pronounce it. Probably Zill, right? I think that's how you pronounce it, Zill. Bullish. Oh, Rose. Rose is wrong. Don't listen to Rose. She could be right, but Rose, right now, the chat and myself, we're looking for shorts. We're team bears. Who's team bears here? And who's bulls? I know Fitz bear, Axel is bear. Harmon, are you bears or bulls? You're still here with us. Bear, good. That's where the high probability trades are today. And if I see a setup going short and I'm wrong, I'm okay with that. But if I were to go long and I was wrong, then that would create a lot of pain inside. Okay. Still no fair value gap that formed after 931, after the open. Price has touched the opening price right now. But look at this on the one, like on the 15-second chart. Look at these highs. Look at this. These are all, this is what priming is. This for me is liquidity. And yeah, Zill, the retail is here to get me. This for me is something I wouldn't want to trade away from. I feel like the market's going to want to snag this. So if I'm trying to forecast the future, I think this is going to get taken before we go short. On the 1 minute, like it doesn't look that bad, but again, it's very high resistant conditions here. And we got to wait for a bit more here. Using 6 minutes. For those who are here with me since 8 a.m., we've definitely waited a long time to get to this moment. Felt like eternity. Oh, look at that. Price is slowly creeping towards all this liquidity here. So this is called a phantom trend line here. This is called retail resistance. Phantom trend line. And it's funny because I used to trade trend lines 7 years ago when I first got into trading. The funny thing is you can draw them so many ways. Like they're like, you can connect the highs to the bodies, and you can always paint a picture no matter what's happening. Now the first presented fair value for inversion. Yep. You in 30 seconds, it's going to present itself. It's going to be somewhere here. So you're right there, Harmon. Okay. First, so this is the 1 minute first fair value gap. Okay. So here is how I trade the first fair value gap. Here is my bias. I need to see these levels break for me to go short. Very simple. The moment it's above it, I am not taking any shorts. Sometimes I take shorts to the first fair value gap, but in this case, break, retest, see some kind of whatchamacallit, some displacement away from it, and then I trade it short. So look at that, guys. Phantom trend line has been taken. This liquidity has been taken. Again, these are very obvious levels for price to hit. Was something tradable here? No, I don't think so. Could you have taken trade off of the open? Yeah, maybe. But like, what if it went lower into the first quadrant and then tapped? It's just, there's nothing. It's hard to create a stop loss for this run here without getting tapped out. Okay. We got our two most, at least this is my favorite indicator. These first percent of fair value gaps after 930. SMT on ES. Yeah. We are going, I don't use SMT, but it's good to hear that there's SMT. News in 2 minutes. 3 minutes. 2 minutes. 2 minutes. All right, price has broken into the downside. If news didn't exist in a minute and a half, I would be looking for active shorts here, but I do not trade going into news. ICT does, but I'm not ICT. Maybe one day I'll get close to this level of trading. All right. We are 1 minute away now from news. So this is a good reaction. Like you can see that the 1 minute fair value gap, it's holding bodies within it. Price failed to go below it. Like this is good. It's indicating that the first fair value gap here, it's acting as an actual PD array. We are 40 seconds away from news. Displacing to the downside now. News in 15 seconds. All right, news hit to the upside. What I'm waiting for right now is I want to see a close below it, create a fair value gap, and I'll take it short. Right now, just because it's in a news hit doesn't mean that we can take it lower. Price hasn't shown us that it wants to go lower yet. What I'm seeing here on the 15 second, this is good. These are lows that want to get taken. I'm also looking how price is reacting to the 15-second fair value gap as well. But I am liking the 1 minute one more than the 15-second today. Just more meaningful. It's larger. Still haven't really tapped into the opening range gap yet. And it's massive. There's food here waiting for us. 10-10 might be the money. Yeah. Okay. So price is going to the upside now of the fair value gap. It closed just above it. We need to see it break through it, create some kind of fair value gap on the 15-second, and that's indication that it might shift direction. Like this right here, again, it's pre-news, doesn't count. Right here, no displacement to the downside, no fair value gap. And you can see here, it's painting really not like there's not even a single fair value gap that formed after news so far yet. There's one right here. Here's a volume imbalance, but that's about it there. So we're still waiting. Are you a full-time trader? I am. Yeah. So I don't work full-time anymore. I'm doing contract jobs on the side, but I think in the next 6 months, I'm going to transition to full-time. It's good to have a side hustle when it comes to full-time trading because it puts a lot of pressure off of trading. I'm currently doing trading. I have an Amazon business that I'm running, FBA, and small contract jobs on the side there for development. So that's kind of how my day gets split. The next thing to get de-scoped is going to be the contracted jobs, but right now it's just mostly trading in FBA. If you guys are looking to do FBA, I don't recommend it. It's very hard. It is a lot of competition. Yeah. It's all about creating as many flows of income as you can while managing your day-to-day life. I don't think anyone wants to be enslaved to a 9-to-5. Okay. First fair value gap right now, price is sitting to the upside of it right now. Again, high resistance here. What is it waiting for? Could be waiting for 950, or it could be waiting for 1010, as Fitz said. From 950 to 1010, if you guys don't know, that's one of the highest impacted algos there is in the morning session, or in the whole day, actually, 950 to 1010. And sometimes we see consolidation up until 950, and then right when 950 hits, price starts going. And it starts pulling into a direction. We got liquidity sitting here. All-time highs. But what's really interesting is this right here, this triple bottom. For me to hit a full-time trader, I need to have banked $250,000 in my savings account for me to essentially become full-time. So I am 15% there right now. I've pulled 25K from Top Step so far, so a couple more thousand to go. Hopefully in the next week or so, I'll do another 25K pull if I get 2 to 3 good trading days, and then I'll be at 50K and slowly kind of hit that target there. Because you want that cash reserve. If you have a bad trading month, you want to make sure that you have something to pull from, so you're not super stressed. Because the moment that you have a mortgage and bills to pay, and you have the thought of, I need to make something work in the next week, you will do bad. You can't have that stress. You have to have the mindset of, we'll see what this week presents. If it's a loser, great. If it's a winner, great. I did quit. I went full-time trading 6 years ago. I was unexperienced in doing I was doing the classic retail trading. I think I was really lucky early on. And then I quit my job to do it full-time, but my mentality completely shifted and I was trading a very incorrect model. So it didn't go so well for me. So I've learned from the past of what it's like trading without a job. And it's very stressful, especially if you have dependents against you as well. Okay, we are at 951. Look at that, 950. And the price, it looks like it's starting to spool to the downside. But we will have to wait for a bit more here. We have to have this break-in. How long did it take to get consistent 20? So believe it or not, I found consistency in the 2024 model, or the most consistency. 2022 was doing okay for me. Nothing crazy. I was doing gains here and there on FX, but for 2024, I ripped through it once and it just clicked 2022 and silver bullet. And ever since then, that's when I found consistency. So I'm more consistent than I ever was in the last 2 to 3 months. So see, as of right now, price is still showing us nothing. Remember, a possible upside target that might get hit is this right here, 970. It's the 25% extension from the most recent price run. But we need to, I do want to see a break below the 1 minute first fair value gap. And if price goes up, not interested at all in it. I'll just be chasing at that point. And the moment you start chasing, you're offside. I highly recommend all of you guys in the chat to watch the 2024 model. Right now, what I'm doing is I'm rewatching it and taking extremely detailed notes. And I'm going to try to create a series of the most important things to focus on from the 2024 model. Okay, price just pushed into all-time highs here. And it's pushing to the upside. And would love it, yeah. Yeah, it's a tough grind. It's going to take me probably 3 to 4 weeks to go through it again and to take all the notes and then create some kind of structure. But I did start yesterday with the first video again for 2024. And I learned some cool things from it that I didn't pick up on the first time, like the midpoint of an NDOG or a NWOG, new week opening gap. It's called the event horizon, right? It's a term that I didn't know that ICT had a name for, but that's what it's called. So, but I think 2022 is a great model to start off with, and 2024 brings it all together. But I will be back in 30 seconds, but we're still waiting for price to hit below the 1 minute first fair value gap. Right, I'm back. Remember, guys, today's Monday after a weekend. Usually Mondays are tougher to trade, but for me, they're usually I think they're my most profitable day. Yeah, Event Horizon. I think so. Yeah, exactly, Harmon. No, it's a difference between the 2 and dog or and the 2 and DOG or and dog. So you have to double check that. I got to review that one part there. I understand differently, but it could be what you're saying there. But I haven't ever heard him talk about a model like around those two. Yeah, let's see some. I guess while we're waiting, I'll drop some notes that I got from that first episode there. Okay. Something that's interesting, and all of you know this already, but when we figure out a draw on liquidity, it doesn't mean that price has to get there, right? That would be the terminus for the trade, but it's easiest to take trades nearing that target, right? So like some of these that I have right here, these would be the trades that I would be interested in, right? But just because you have a bias or end terminus doesn't mean the price has to get there. So that's something that I kind of, it reminded me that take profits along the way. Let's see what he said. Again, it's all mostly, one thing that all of you should know is, and take notes of this, is when you guys are looking at creating fair value gaps, prices are in reverse here. So gotta watch this. But if there is a volume imbalance in front of a fair value gap, make sure that you add both of those in. So to give you an example here, the FVG here, it wouldn't be this. It would be actually this. You always have to include that volume imbalance when you're creating your fair value gaps. That is something that he talks about in the very first episode of 2024. Again, make sure you guys use that kind of fair value gap building. Let me see here what's happening on the 1 minute. Got a fair value gap here. It could be a possible inversion, or if not, it was just a close below it. Like we're looking right now for signs or indications that price is going to shift to the downside. But as of right now, we got equal highs here on the 15 second. Right now it's almost 10 o'clock. Something else that he talks about earlier on the day is how to trade the pre-market. And it's what I do. It's at 7 o'clock Eastern. You start looking for relative equal highs or lows from 7 to 7:30. And then you trade those. And then from 8 to 8:30, you trade those. And then 9 to 9:30, and then you trade those. So whenever you guys look at my charts, like you'll always see like a little dotted blue line at 7 o'clock. And usually I try hunting relatively clean setups pre-market. But it looks like I'll give price till 11 o'clock today. 10:30, if I don't see anything nice, I might start closing down. But price still has a bit of time to show us a possible reversal. So price has hit the 25% extension on the 1 hour time frame. None of this has been traded to. If we are correct about this, that this is the Judah swing, it's going to be a massive run to the downside. This is some crazy bullish price action right now. And if you're thinking right now that I should have grabbed something long today, you're essentially trading against a model that's for you is hitting the mean threshold of the 50% opening gap, which is right here. So a lot of targets have been created to the downside here. It's a really nice run to the upside with a lot of liquidity resting below it. So we are just going to see if price will present something today, or if not, if it's good, if it's going to continue keep going up, then we will we'll hold off until tomorrow. So I'll change this back to red and never displace return to an IFEG, even though it mohawked below it, not right above it. You've got these fair value gaps here forming to the upside. Again, taking shorts up here and risky, very high to catch the tops here. This was the same setup that we caught on Friday, the 5K move. Priced it exactly this, created a fair value gap, went way above it, and then around 1020, aggressively dropped lower, and we caught the shorts. Very similar market profile to Friday's day. And most likely what's going to happen if price won't trade to this level here, it's probably going to trade to it tomorrow or the day after. It doesn't mean that this area is void or null. This gap still exists in the market, and it will be traded to and filled in some point in the future because it's not been filled effectively. What has worked for you better? Pre-market, the pre-market open? For me, my highest strike rate model and the model that I've made most money on is, I would say, 70% first fair value gap, and then 30% of it is pre-market open. But usually, like when it comes to pre-market, I'm not at the charts. I'm kind of glancing it, starting off my morning. But setups do happen there, and the only day that I actively trade the pre-market is going to be the Monday of NFP week. That's when the setups are the cleanest, the longest. It's all smart money. It's how they're making their trades essentially that Monday. So that's the Monday I recommend to trade pre-market. Pre-market also works best when there's no news in the afternoon. That's where I see also the cleanest setups. So no news days, pre-market, NFP Monday, pre-market. And then for the rest of the days, most likely I'm trading post 9:30. But Harman, my strike rate's 45%, but my average risk reward is 4-1. So that's kind of how, that's where I make my money. So high RR is where my edge is versus having I think ICT strike rate's like around 73%. So if you manage to have a higher one than 73%, then that's great. But it's all about how long can you hold on to your winners for? And how can you effectively scale out? There's still no indication that price is going to go down. Starting to paint a bit more here. Consolidate. Might be a tipping point. Oh, hey. Hey, wish me well. How's it going? Wish me well. Right now we're trying to see if we can grab shorts for today's market conditions. So far, nothing has presented itself after the open. We tried to catch a long here in this consolidation. I got tapped out by 1 pip, but everyone else managed to get out break even. So it was a bit messy, but it was just a setup for the 930. The trade was somewhere here. The gang took it long. It was somewhere. Where did we take it long? Somewhere here. This was my first trade here. But unfortunately, price tapped me out right to the fucking pip here. And then it took everyone else out at break even. Okay, price is looking a bit interesting here on the 1 minute. Let's see how it's going to react to this fair value gap here on the 1 minute. Yeah. Over the last 3 weeks, I think 3 or 4 of my trades got tapped out by 0.25 of a point, and they went to profit. That's for me the most frustrating thing that can happen. I just get like honey decked, like tick, and price goes the other way. Okay, so here's the 15-minute chart. Fairly bullish. Let's see the 5-minute chart here. No fair value gaps. Price has moved up very efficiently. One of the only fair value gaps that have formed recently has just been respected. This high has been taken here on the 15-second chart. Just trying to see if we can frame something here. Initially, what I want to see is a break below this to take it lower, but we can also take a trade to the first fair value gap because it does act as a magnet or a pull. As of right now, I'm not seeing anything good. Price, where are you going to go, man? Do we have any more news for the day that I'm not aware of? No, we don't. Tomorrow we have core retail sales at 8:30. Cool. And even though money could have been made grabbing longs today, I would never take these longs. Never, ever. And ICT wouldn't, he's telling us not to as students. He probably would, but I will always be bearish, or my bias will always be bearish after an open like this. Trying to see if FEs are being respected right now on the 15-second chart. We have one inversion here. 1 rejection, 2 rejection. Price comes up again for like a 3rd time. This fair value gaps can become questionable because usually what you want to see is fair value gaps being traded to and then just price moving. Awesome. Tomorrow will be a better day. I think so too. We'll see. Price. I'm giving price 50 more minutes today to do something. It is Monday too, so. Like looking at the 1 hour now, fairly bullish close at 9 o'clock. The 10 o'clock candle just opened up. The 4 hour is very bullish. So if price were to get down to these levels here, it would have to break a lot of levels at this point. Not saying that it can't, but again, we're trading against retail traders here, and I just want to see if price will give us a reversal here. This fair value gap is piquing my interest. It's being respected very well. All the bodies are sitting right above it. For now, there is less probability. Yeah, exactly. 10-10 baby, let's sweep those highs and let them out. Exactly fit. Yeah, 10-10 just hit. About to go. Yeah. Armin, nice talking to you. Have a good one. All right, so price might be reversing here, actually. I want to. We got relative equal highs here on the 1 minute and 15 second, but we are displacing to the downside. This has to act as an inversion here. Let's see how price is respecting price on the 50 second. We had our first 5 minute bearish close. Actually, no, I'm lying. But we had a 5 minute bearish close recently. So far, it looks like that was a nice rejection of all these levels. I like how that body closed on the 1 minute. I'm going to take a small short here. Very small though. I'm just relying on price to maintain and have this fair value gap or this inversion respected. I took a third of a position or a quarter of a position right now. Looks like I broke above it. We'll give it 10 more seconds. It's the high risk trade, guys, here. This is more of an RR trade versus I'm going to be correct on it. My target's going to be the first fair value gap. Price does melt. 928. 928. Slightly larger too from my end. That is how I'm taking it currently. The 2.5 to 1. There is a lot of liquidity like resting above us here. So be careful with your stops. I think it's going to get tagged once more if it does drop. But I have a feeling it might jump down from here. A price turn to break below. What we want to see is this 1 minute candle close below this inverted fair value gap. If it is, that's going to be the first sign that we're going to continue going lower. There we go. There's a drop. Yeah, hopefully get it fit. Is anyone else in this trade right now short? This was, I would say, a nifty little one. Fit, what's your target right now? I'm going to be targeting, I'm targeting 837 as my terminus. 837. We'll see if we get that low. Don't think so. 829, yeah, same. We have created a fair value gap here to the downside, which is good. Indicating bearish pressure. Nice. Perfect. I'm just really curious how it's going to respect these first fair value gaps here. Prices might go here and just reverse. But we'll see. Got a bullish fair value gap here. Price closed to the upside of it. If price starts going to the upside, it's going to take out all these targets here. My stop right now is sitting above these relative equal highs here. Because if it tags these highs, it's going to tag these highs as well. Let's see you drop, baby. I'm currently 5 micros in short. Total risk on the table is 170 per account, so 800. And if it hits TP, then it's 1.3 per account, so like 8K. Whatever the math is on that. We will see. The 15-minute still hasn't had me convinced that we're going to drop. This is more of a trying to catch the upside based on reasonable price action and an inverted fair value gap on the 1 minute, taking it shorter. What I might actually do, I'm going to be a bit more risk adverse. 928. I'm going to take off 1 micro. Once we hit this level here. So price is moving nicely to the downside here. I'm going to move my stop above this high here. I think it's well protected at this point. Oh. It's funny because Harmon left right before money was made. It's funny because Doug left on Friday before the big move. No, Harmon left. I'm just laughing. Oh, it still might hit us. Still might go the other direction, but this is really good here. This is a 1 minute market structure shift here. Once it breaks this level, the 1 minute market structure shift. And it's just indicating that price is going to keep dropping And what does price want to do right now? I think it just wants to take away from all these winners here. Okay. It broke this 1 minute fair value gap here. All right. It's really breaking through everything. I wish I traded more than half a mini, but I'm going to partial right now in a sec. I'm partialing out at 928. I'm going to do a buy limit. I'm going to exit 40% of my position. Or let's do 20% of my position here. I'm moving my stop soon to break even. Once we hit this first fair value gap, stop's going to be at a slight profit and break even. Let's go. Keep going. Keep going. I almost partialed out there. Okay. The stop's officially at break even. My stop is resting right here. It's right here. This should act as an inversion fair value gap. We see price break this inversion and break these highs here. I'd be happy with exiting. What we want to see here is continued bearish price action. Okay. The inversion broke. First line of protection. All right, looks like I'm going to be out here in a sec. All right. I'm out. Unfortunately, I didn't get my partial. Just sitting at the first fair value gap. How much did I make on that trade? Pennies. $15 per account. $100. Okay. Doug's here, yeah. So we'll see what price has to do now. But it's unfortunate that price didn't continue pushing lower. It's closing pretty bullish on the 15-second or on the 15-minute chart. I think the bulls are just too strong today to take a short against it. But I think overall that was a good attempt to catch the short, which would have pushed lower into the relative equal highs or the RTH gap. And right now, where is price going to go? It's probably heading for these equal highs here. Yeah, it's wacky. Glad you got out, but yeah, it's most likely going for another. What happened? Yeah, it's, you know what it is? It's just price action is very bullish today, and this attempt lower, it was a good attempt, but unfortunately price is probably going to keep going higher. So I think let's give it 5 more minutes, see what happens at 10:30. And if not, I'll close down the stream. And I think I'm done trading for the day. But again, look how it's trading on the 15-minute here. It's closing above the 15-minute fair value gap. It's probably going to keep going up here. Would you want to catch a really small long? Possible, but I don't know. Not like a long-term realistic model to trade off of. So that is unfortunate. My partial was 1 full point away from partially 40%. Okay. So that's why it's really important to do partials. I think a good partial was here actually too. But again, we were aiming for bigger positions here regardless. So I think for those who traded it and who got out at break even, I think it was well executed. Pat on the backs. But we will catch the runners. We caught one on Friday, and there's many more opportunities to come in the near future. So it's also like pre-Christmas. It's the week before Christmas too. So we might see wacky shit moving forward. The 5-minute close, very bullish. And this is not something I would be shorting against. This kind of candle creation. So it looks like today we are at 1 break even and 1 loss for a total of 116 minus per account, so 600. I think that's acceptable. That's essentially 40% of my actual risk that I usually take. So today is essentially a break even. Got to keep it positive. Tomorrow we got some good news coming out. So early highs. So it might be a good trading day. It might be the range that we're looking for. Tomorrow might actually tag these relative equal lows here. I do want to see how today's daily is going to close. But right now it's going to, look at this. It's going to be a fairly bullish close. Maybe the afternoon session might present some shorts, but usually I don't trade the afternoon session. That's going to be too much for my mind if I trade 6 hours a day. But on that note, we won't be taking any more trades. So I'm going to be closing off the live stream. Thanks guys for hopping in. Hope you guys learned something. It looks like most of you took 2 break-even trades today, but we've found an opportunity to get into the market. We've protected our stop losses, and that's how we catch the winners. So good job, everyone. And most likely I'll talk to you tomorrow. Cheers.